Hi guys, it's Thomas here from COTbase.com. Welcome to a weekly COT review. Today we're going to be analyzing the 30th Commitments of Traders report of 2023, and as we always do, we shall start off by looking at the largest changes in commercials positions. Before we jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTbase.com, you'll find a lot of educational material, not only in written format, but we do have some very useful videos as well that can guide you through the analysis process step-by-step tutorials. And of course, we do offer consultations. If you have any questions by email, you can send it to info@cotbase.com or just comment underneath the video. Okay, back to the review, and starting off as usual with our first market that's on top of our list based on a 52-week look back period. So we are analyzing largest changes in commercials. We are looking at net positions, of course, the legacy, or as we call it, the classic COT report type. There's other COT report types as well, but this one has the longest COT history. And we are looking at the combined futures and options data type. Let's start off with cotton. As you can see, it's on top of our list. We have a 35% change in commercials net positions. Commercials represented with the red line over here. And this recent change can be witnessed on the chart over there. As you can see, it's quite clear that it is the largest change in the past 1 year that we have on the chart. So it's a significant change size. We have seen a bit of a decline already. It is suggesting further weakness in the near term. But if we move on to the 5 years chart, we get a chance to analyze the COT Extreme, which, as you can see, was more bullish for quite some time now. The fact that commercials were net long, as you can see on this 5 years chart, that doesn't happen that often. So this was a bullish extreme situation that's been going on, I'd say, since October of 2022, and you can see we may see prices moving higher. This could be a bottom. We may not see any breach of this support level anymore, because that's the tendency. If we've reached an extreme from which we have a trend change, we will be getting these larger change sizes, signaling, shorter term reactions in the market. I would always put the emphasis on the extreme analysis rather than the COT change, but that's just the way I do business with COT data. The next market is the wheat. We have, of course, different type of wheats. In this case, we are analyzing the Kansas City wheat. 34% change over here back to the 1 year's chart. You can see it on the chart. What I normally would expect to happen, or if I really want to take a COT change signal into consideration for my trade, is if the signal is coming just after the market is in its, it's in its dynamics. So if we would have the opportunity to see this report, which of course is representing a Tuesday's data set, but CFTC issues it on a Friday, so that's that horizontal line on the net positions chart. You can see that basically that would have been a wonderful point to go short on this market. So now that it has moved away, of course, it's a bit harder to get in. Of course, that could apply to cotton as well. We had a similar pattern over there. But that's that. It's not always going to be the best timing. But for instance, here, same thing. This is a bullish COT change signal. The time of the data is here, just at the bottom. But by the time we get it, it's already has moved in that direction. We do find examples sometimes when we get the understanding of what traders are doing at a right point in time. That's not the case here in the Kansas City wheat. So I'd move on and have a look at the 5 years chart, which is, by the way, a bit similar to cotton in the respect that we are moving away from a relative bullish extreme. Relative because it's not as bullish on the 5 years chart. You can see we have seen much greater extremes. You know what, to be fair, I wouldn't even call this a bullish or a bearish extreme. It's more or less in between the two extremes that we see on this 5 years chart. So not much to do here. in respect to the COT data. We have a few complex markets here that I'm going to jump over. Rough rice is our next market, where you can see already that we're not only going to be talking about COT change, the 22% that we have in this recent report, which is of course again a bearish change signal suggesting further weakness. However, it's not the best timing. We have seen this week showing a bit of a decline. But if we jump to the 5 years chart, you can see that we have a pretty significant bearish COT extreme in rough rice, suggesting that this rise that we've experienced since the past couple of weeks may not necessarily be that long lasting. We could see further weakening in this market. Moving on to large speculators COT extreme analysis, we have Palladium on top of our list with an all-time extreme. This has been, of course, the case last week as well, meaning the large extreme. These all-time COT extremes can be present in a market for many, many weeks or months before we see the market reacting. It's nice to see that overall in metals we do see space for the markets to rise. It's definitely supported by the COT report from Palladium. However, it's a smaller market. You want to see a sector and see correlating markets, what they are doing before you act on one specific market like Palladium here. The next market is going to be cocoa, where we have a significant bearish COT extreme, 177 report in large speculators. But of course, if you look at the charts, it's visible that we have that in commercials as well. If we go back in time, you can see back in February of 2020, we had bearish extreme just at that top. We are expecting a top to be developing in the next couple of weeks and months ahead of us. Rough rice, we talked about. We're going to jump over that to our last market for the review, which is the dollar index. I should point out that after talking about the dollar index from a COT analysis perspective, we are going to shift over to the euro-US dollar currency pair for just a moment and have a look at the wonderful iCOT Intraday Indicator, because of course the euro is the largest component of the dollar index, as you may know. So here we have a 107, meaning roughly 2 years worth of data, COT data, extreme, and that really puts us towards more bullish extreme levels. It's not there yet. I can easily see the dollar index come further down as the extreme widens to greater bullish extremes. We shall see what happens. And then, as I've promised, here we have our own iCOT Intraday Indicator tool. Once again, this is our own indicator. It is not the COT charts here that you see, get from CFTC. It is our own iCOT scores charts. We spent many, many years developing this indicator. This is a 1 hour candlestick chart on the euro-US dollar currency pair, and it just shows you how well it can supplement classic COT analysis. A very useful tool. If you want to read more about it, here at cotbase.com under indicators, you will find our indicators, COTBase Pro, everything that has to do with the COT data issued by CFTC. You do get the NinjaTrader indicator. You can use, of course, all the tools that you see in my COT reviews in your own NinjaTrader platform. You get to download our data. Really, really great for more sophisticated traders. And then the I standing for intraday, the basic iCOT, and the more advanced with AfterSignal. With AfterSignal, basically what it does is it really filters out. For instance, here it's a great example. The market is headed higher. We are getting a lot of bearish signals from the scores chart, but it will tell you when is the good time to go short. That's what the AfterSignal does, and it also draws a stop line, which, by the way, you can of course adjust. This is pretty much a default setting. I did increase the stop line a little bit. That correlates with the dynamics of the euro-US dollar currency pairs. You really want to understand what the market is doing, but once you do that, it really works just fine. That is all for this review. I do appreciate your attention. Thank you very much for being with me. I hope you guys will have a wonderful weekend. And don't forget to subscribe and hit the like button if you can. That means a lot to our channel. Thank you very much. Take care and see you next time.